First Life Radiance Smart Invest Plan. Will investing in this plan help in your wealth accumulation process in the long term or not? Let us find out through an in-depth analysis in this video. Hi, welcome to holisticinvestment.in. We help individual investors like you to make the right financial and investment decisions to reach your financial goals in a faster and smarter way. So, before analyzing this policy, let us first understand what is India First Life Radiance Smart Invest Plan. It is an unit-linked, non-participating individual life insurance endowment plan. And some of its key features of this policy are that it provides you with a safety net for you and your loved ones through the life insurance cover provided in this policy. Also, you can tailor the India First Life Radiant Smart Invest policy to suit your investment needs through flexible payment terms and premium payment options. Also, there are three different plan options for you to choose from based on your life insurance coverage, which are the life option, second one is the extra shield option, third one is the family care option. You also have the flexibility to choose from 10 fund options and investment strategies as per your requirement. You can grow your money while you participate in the market linked fund options in this available in this policy. Now, as we have understood the India First Life Radiant Smart Invest policy along with its features, now it's time to understand what are the benefits available under this policy. So, you get two benefits under this policy. First one is the death benefit. So, the death benefit is given to the nominee in case the policy holder unfortunately passes away when the policy is still in force. So, the death benefit will be the highest fund value as on the date of the death of the life insured. Also, the maturity benefit will be the fund value at the end of the policy term, and also the total mortality charges deducted throughout your policy term. Also, the amount equal to your annualized premium based on your policy term and premium paying term. So, these will be your maturity benefit. This you will get the maturity benefit once your policy matures. So now let us see what are the investment strategies available under the India First Life Radiant Smart Invest Plan. First, we have the automatic trigger based investment strategy. So if you opt for this fund strategy, then you will have and shows an equity option which you can choose from the equity fund options, which can be equity one fund, value fund, index tracker fund, equity allied opportunities fund, flexi cap equity fund, and sustainable equity fund. And automatically the earnings of funds in the chosen equity fund will be transferred to your debt fund based on your predefined trigger rate of 10%. Next, we have here the fund transfer strategy of the India First Life Radiant Smart Invest Plan. Here you have to choose two fund options, one from a debt type fund, another one is the equity type fund. So after your premium is deducted from applicable charges, the premium will be allocated to your chosen debt oriented fund along with existing units in that fund if there was any. And then what will happen is the units from the debt oriented fund will be then transferred systematically on a monthly basis to the chosen equity oriented fund. So next we have here is the age based investment strategy. So here your premium after the deduction of applicable charges will be distributed between equity fund, debt fund and value fund based on your age. They already have a predefined proportion to each of these funds based on your age. So as you grow older and move from one band to another, your funds are redistributed. Why this strategy is applied here is to balance your portfolio and adjust the risk exposure as you grow older. You can opt for this fund also if you want to invest in this way. Next, we have here the smart switch strategy. Here, this investment strategy is specifically designed to systematically move your savings into low risk fund options near maturity of your policy to safeguard your returns. So, in this strategy, you may choose to save in any or all of the 10 available fund options. Next, we have here is the defined allocation strategy. So here you can choose any 4 fund options from the 10 fund options available, and you should specify the allocation for each of these selected funds. So what the policy will do is they will distribute the fund on a half yearly basis to ensure that your funds remain in the same allocation as specified by you as the beginning of the policy term. And finally, we have here the self-managed strategy. So by choosing this strategy option, you get access to all the 10 segregated funds. You can choose to put your premiums in one, multiple, or all of these options based on your risk appetite and needs. So if you want to refer to the fund options, you can definitely take a look at the policy brochure of the India First Life Radiance Smart Invest Plan. And you can choose whichever investment strategy that you think will best suit your investment needs in the long run. Now, what are the advantages of investing in the India First Life Radiant Smart Invest Plan? First, you can switch from one fund to another fund any number of times during your policy term. Also, if you have in case of any financial emergencies, you can make partial withdrawals from the accumulated funds. There is also systematic partial withdrawals which is allowed after the completion of the first 5 policy years provided the life assured is 18 years and above. And finally, the total mortality charges deducted throughout your policy term will be payable at the end of the policy term. So these are some of the advantages you can get by investing in this policy. Now, what are the disadvantages you might get by investing in the India First Life Radiant Smart Invest Plan? So, it's equally important to understand both the advantages and disadvantages, especially the disadvantages, because it will reveal the risk you might get by investing here. So, there is no liquidity available in this policy for the first 5 policy years. So, we know that there is systematic partial withdrawal and partial withdrawals available in this policy, but not for the first 5 policy years. And also, there is no loan facility available in this policy. There is also no loyalty addition or fund boosters available under this plan. So now we are going to move to the next part of our analysis, which is the IRR analysis. No matter the benefits and advantages we can get from investing in a policy, the main thing we look for is the return. The return we get in a hand at the end of the day. So it's important to analyze the internal rate of return to analyze what kind of returns we might get by investing in this policy. So let us assume that a 35-year-old male buys this policy for a sum assured of 15 lakhs. So he pays a premium of 1.5 lakhs for the next 20 years and the policy term is also for 20 years. So we are going to calculate the IRR here through the website calculator given in the India First Life Radiant Smart Invest Plan website and also through the figures they have mentioned in the policy brochure. So how we are going to calculate the IRR is, as this is a market related instrument, we are going to calculate the IRR for 2%. One, for the worst case scenario, we are going to calculate it at 4% per annum, and for the best case scenario, we are going to calculate it at 8% per annum. Both these percentages are for example purposes they have given in the website. This is not guaranteed returns. So the IRR return for worst case scenario at 4% per annum is 2.31%, and for the best case scenario when it's performing at 8% per annum, we are getting 6.24%. So these both returns are too low for a market related instrument like the India First Life Radiant Smart Invest Plan. 2.31% is similar to the interest you can get from the savings bank account. So if you have not invested anywhere and just kept your money all these years in a savings bank account, you will still get similar rate of interest to this. So what's the use of investing in a market related instrument like this for such a long time? And also 6.24 return is comparable to an FD, a debt instrument like a fixed deposit. So what is the use of investing in a market related instrument? By taking risk, we take risk only to maximize the returns potentially in the long run. And also FD will at least give you a guaranteed return, but here both these returns are not even guaranteed and the returns can even go lower than this. So as there is no guaranteed and the results are not risk adjusted, neither are they inflation beating returns, we can see that this is not a justifiable return for the time and money we have invested in this policy. So as we can see from the IRR analysis that India First policy Radiance Smart Invest Plan is not giving us the justifiable returns, now we are going to move to the next part of our analysis where we are going to compare this policy with other investment products available in the market just to see if we invest the same amount of time and money in other investment products, will it give us more returns than investing in the India First Life Radiance Smart Invest Plan. So what we have come up with is we are going to invest in a combination of one pure term insurance plus PPF, another is the combination of pure term insurance plus ELSS. So why we have chosen to invest in a combination of this is because we have separated the investment and life cover from our wealth accumulation journey. We are not going to invest in a life cover come investment purpose journey like India First Policy Radiant Smart Invest Plan. So for life cover purpose, we have chosen a pure term life insurance policy with a sum assured of 15 lakhs, just as India First Policy Radiant Smart Invest Plan for a fair comparison. But the catch here is the annual premium you are going to pay here is only 7,900 over a 20-year premium paying term. The policy term here is also 20 years. So after paying the premium, we would have a remaining balance of 1,42,100 rupees. So each year we are going to invest this money in a chosen investment vehicle. So for not a riskless product like a debt instrument, with a guaranteed return, we have chosen PPF, which is Public Provident Fund, which is a government-backed product with guaranteed returns, and it can even give you tax benefits under Section 80C. So we choose to invest in PPF plus term insurance policy combination for the next 20 years. We will get an IRR of 6.64%. As we have already seen, this is a return comparable to the best case scenario of the India First Policy Radiant Smart Invest Plan. So, but in India First, it's not a guaranteed return. Here, you're getting a guaranteed return, which is a decent return for a debt instrument product. Also, if you look at the combination of investing in term insurance policy plus ELSS, the return we get after 20 years, the IRR is 10.94%, and the amount is 1 crore 6 lakhs 14,000. So here you can see that this is a post-tax value. Pre-tax value is 1 crore 14 lakhs, but pre-tax value is 1 crore 6 lakhs, which is definitely a drastic comparison compared to India First Life Radiant Smart Invest Plan. But why we have chosen to invest in ELSS mutual funds is also because it has a consistent track record of showing us that if invested in ELSS for more than a period of 7 to 10 years, it can even give us a return of up to 12%. So under that, according to that track record, we have calculated the returns. And for risk related product, it has given us a risk adjusted return, and more than a risk adjusted return, it has given us an inflation beating return, which is definitely justifiable in the long run to help in our wealth accumulation process. So you can see there are better products available in the market for our investment journey to start a wealth accumulation process, for which we need to do a little bit of research and try our best in finding one, compared to investing in policies like India First Life Radiant Smart Investment Plan. So what is the final verdict on India First Life Radiant Smart Invest Plan? Should we invest in it or not? Whether it's worth investing or not? We can see from our analysis that it falls short of expectations. It's not giving us the returns we expect. It also has hefty charges and high agent commissions that suitable for a ULIP plan, but it will definitely impact our returns in the long run. So from the IRR analysis, we can see the return of investment is nil because it's not giving us a risk adjusted return, neither is it giving us a inflation beating return for the risk and money and time we have invested in it. So instead, we can choose to invest in a pure term insurance policy for a more affordable premium for a higher coverage, and you can also diversify your investment through various asset classes. So by separating your in life cover and investment, you can definitely help this concept in your wealth accumulation process. So you can even get inflation beating returns in the long run. But if you have doubts regarding which one to invest or which one will suit your investment portfolio in the long run to accumulate wealth, you can definitely involve a certified financial planner as your guiding star in your financial planning, because they will definitely consider all kinds of factors like investment objective, your risk profile, your asset allocation, and also your overlap ratio between your investment portfolio and the investment portfolio of the fund you are choosing to invest. So by involving a professional, your wealth accumulation process will definitely get smoother in the long run. So if you want to read more of an in-depth analysis of this policy, you can definitely check out the blog post in our website through the link in the description. Also, if you want more professional guidance for your investment and financial related decisions, you can definitely book one of our financial planners for a complimentary consultation through the link in the description. We also regularly conduct free live webinar where you will be able to interact with leading experts in the finance industry to gain more investment and financial insights. If you're interested in learning like that, then definitely register through the link in the description. If you like this video, definitely hit like and subscribe to our YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.